Here's something most new entrepreneurs get wrong. They think every new business idea means forming a brand new LLC. New filing fees, new registered agent, new EIN, new accounting setup. In reality, in most states, you can legally run multiple businesses under one LLC, and depending on how you structure it, you could save anywhere from $500 to $3,000 a year in duplicate costs. But here's the catch. Do it wrong, and you could accidentally expose your personal assets or one business's liabilities to your other business. So today, we're breaking down exactly how to add another business under your LLC, what it actually costs, and where people mess this up. This video is for people who already have an LLC and want to launch a second income stream, a side hustle, an e-commerce brand, a service business, without starting from scratch. It's for freelancers juggling 2 or 3 gigs under one name, and for small business owners who want to test a new product line before committing to a whole new entity. This is not for you if you're launching a business with completely different liability risk. Say, you already run a low-risk consulting LLC and now want to start a business involving heavy equipment or client injury risk. In that case, separating entities protects you, and we'll explain exactly when that matters. So what does adding a business under your LLC actually mean? There are 3 real paths. 1. A DBA, or doing business as, which lets your existing LLC operate under a different brand name without creating a new legal entity. 2. A series LLC, available in about 20 states, which lets you create separate cells under one parent LLC, each with its own liability protection. 3. Forming a subsidiary LLC owned by your original LLC, which gives full separation but costs more. Each method makes money the same way your original business does. You're just changing how the legal wrapper is structured around it. Now, why does this actually matter right now? According to the U.S. Census Bureau's business formation statistics, Americans filed over 5.5 million new business applications in 2023 alone, a number that stayed historically high since 2021. And IRS data shows a large share of small business owners now report multiple income streams on a single return. The side hustle economy isn't slowing down. A 2023 Bankrate survey found that roughly 39% of U.S. adults have a side hustle. The problem is, most of them don't know they don't need a second LLC to run it legally. Let's talk numbers. Here's the minimum investment breakdown if you're doing this properly. Category estimated cost, USD, DBA/fictitious name filing $10, $150, state dependent. Series LLC formation, if applicable, $100, $500 registered agent, if new entity needed, $50, $300 per year EIN for new branch, if required, $0, free via IRS. Operating agreement amendment $0, $300, DIY versus attorney, business license, local/state, $50, $400 business bank account setup $0, $25 website/branding for new business $0, $500 total minimum investment $210, $2,175. Beat. And yes, that range is wide because it depends entirely on which of the 3 paths you choose. A simple DBA is the cheapest. A series LLC or subsidiary costs more but gives stronger protection. Here's where that money actually goes. The DBA or series LLC filing fee goes straight to your Secretary of State. It's what makes the new brand or cell legally recognized. If you're required to have a separate registered agent for a subsidiary, that's an ongoing service that receives legal documents on your behalf. The operating agreement amendment is arguably the most important line item. It's the legal document that defines how your businesses are separated internally, and skipping it is one of the biggest mistakes we'll cover shortly. Business licenses are tied to what you're actually doing. A service business often needs less than a business selling regulated products. And the website or branding cost is optional but recommended if the new business is customer-facing. Monthly operating costs after setup are usually light. Expect $0 to $50 for a registered agent renewal, annualized, $20 to $100 for bookkeeping software if you're now tracking 2 revenue streams, and possibly $50 to $150 per month if you hire a bookkeeper to keep the 2 businesses' finances properly separated, which, by the way, is non-negotiable if you want to keep your liability protection intact. Now let's talk value, because this isn't a revenue-generating business on its own, it's a cost and risk optimization move. Conservative case. You save roughly $500 to $800 a year compared to forming and maintaining a fully separate LLC. Realistic case. Most people running 2 to 3 ventures under one structure save $1,500 to $3,000 annually in formation fees, registered agent costs, and accounting overhead. Optimistic case. Entrepreneurs running 4 or 5 brands under a series LLC or DBA structure can save $5,000 plus a year while simplifying tax filing to a single return. Industry estimates suggest the administrative time saved, fewer filings, fewer logins, one accountant instead of 3, is worth just as much as the dollar savings. Break even here is fast. Since your minimum investment is often under a few $100s, most people recover that cost in the first month simply by avoiding a second LLC's formation fee, which alone typically runs $50 to $500 depending on the state. Now, the mistakes. The biggest one, commingling funds, running 2 businesses through one bank account. This is the fastest way to lose your liability protection entirely, because courts can pierce the corporate veil if your finances aren't clearly separated. Second mistake, assuming every state allows series LLCs. Many don't, so you need to check your state's specific rules first. Third, skipping the operating agreement update, which leaves no legal paper trail proving the businesses are actually distinct. Fourth, picking a DBA for a high liability business when it actually needed full separation. Where's the opportunity here? Most small business owners, freelancers, Etsy sellers, real estate investors, consultants, have no idea this option exists. They either avoid a second business entirely because forming an LLC sounds expensive, or they overspend forming a redundant one. If you're a consultant who wants to test a productized service, or an online seller launching a second product line, structuring correctly the first time is a real competitive advantage. You move faster and spend less than someone starting from zero. Here's how to actually start. Step 1. Check your state-specific rules on DBAs and series LLCs. This varies significantly. Step 2. Assess the liability risk of the new business. If it's similar risk to your current one, a DBA may be enough. If it's higher risk, lean toward a subsidiary or series LLC. Step 3. File the appropriate paperwork with your Secretary of State. Step 4. Amend your operating agreement to clearly document the new business line. Step 5. Open a separate bank account and, ideally, separate bookkeeping. Step 6. Get any required local licenses for the new business specifically. Step 7. Set up your branding and, if it's customer-facing, your website. That last step is where a lot of people get stuck, because now you potentially need a second website, maybe a CRM to manage a new set of customers, or inventory tracking if it's product-based. This matters because running 2 businesses without separated digital systems creates the same commingling risk we just talked about, just in your operations instead of your bank account. If you need a website, CRM, or booking system built out for your new business line, this is exactly the kind of implementation work SoftAngle specializes in. They don't advise on the business or legal structure itself, but they can build and set up the website, CRM, or automation systems your new business needs to actually run. You can book a free consultation and estimate with them. Link is in the description. For marketing the new business line, keep it simple. Online, a dedicated Google business profile, targeted social content specific to the new brand, and email segmentation if you're using the same customer base. Offline, local networking events and referrals from your existing customer base. That's often your fastest, lowest cost channel. On a tight budget, focus entirely on organic content and referrals before spending on ads. Once you have consistent revenue, scale with a small paid ad budget specifically tied to the new brand's numbers, not your original business's numbers. The real risks here are legal, not financial. If you don't separate finances and paperwork properly, you can lose the liability protection of your LLC entirely, for both businesses, not just the new one. Some states also restrict or don't recognize series LLCs, so what works in Delaware or Texas might not work in California. And banks sometimes require extra documentation to open accounts for DBAs, which can slow you down if you're not prepared. Consult a local attorney or accountant before choosing your structure, especially if liability risk is different between businesses. Keep finances completely separate from day one. Don't assume DBA and series LLC mean the same level of protection. They don't. Don't skip your state-specific compliance requirements just because a filing was cheap. So, is this worth it? If you already have a working LLC and a genuine second business idea with similar or lower risk, yes, this is almost always cheaper and faster than starting over. If your new idea carries meaningfully higher liability, don't force it under your existing LLC just to save a few $100s. The protection gap isn't worth it. This is best for people who are organized, willing to keep clean books, and serious about running more than one revenue stream properly, not for someone looking for a shortcut around actual business planning. If this helped you understand your options, subscribe. We break down business structuring and cost realities like this every week. And if you're at the stage where you need the actual website, CRM, or system built for your new business line, SoftAngles can help with that implementation. Free consultation link is in the description below.